Humans are idiots. Give us something shiny or new with perceived value and we'll throw money at it until the bubble bursts. Honestly, history is basically one long series of financial faceplants. From tulips to tech stocks to monkey NFTs, we never seem to learn our lesson. So today, we are going to be looking at some of the biggest bubbles in history and see just how stupid we've been. And I also want to hear from you in the comment section which bubble is your favorite. Also, please like and subscribe. Do it now. Alright, let's get started with the original bubble, tulip mania. The tulip flower is beautiful and it originates from Turkey. When it was introduced into Holland in the 17th century, which by the way is the craziest country ever. Anyway, people were literally selling their houses just to buy a flower bulb. Seriously, it gets so mental that at one point, a single tulip bulb would cost more than people's annual salary. Right, the problem was that people were only buying tulips so that they could sell them on to a greater fool. When the bubble bursts, lives were ruined, all for a plant that dies if you forget to water it. Right, next up, we had the South Sea bubble in 1720 England. Right, Holland doesn't have a monopoly on stupidity. Even the greatest country ever can be a wee bit silly. The South Sea Company promised endless wealth from trade with South America, and everyone piled in, even brainiac Sir Isaac Newton.
Sir Isaac who?
Yes, the genius who discovered gravity still lost his shirt in the market. He later said, "I can calculate the motions of the heavenly bodies, but not the madness of men." Right, over in France, we had the Mississippi bubble. John Law basically convinced people that Louisiana was El Dorado. Spoiler alert, it wasn't. The scheme collapsed, France's economy went into meltdown, and Law had to run for his life. Not exactly a happy ending. Fast forward to the 1840s, and we're back in England for railway mania. Railways were the hot new tech, and everyone thought they'd get rich. Thousands of dodgy projects got funded, most of which went nowhere. Imagine a British railway going nowhere, eh? When the bubble popped, investors were left with nothing but muddy tracks and empty pockets. Right, the big one, the Wall Street crash of 1929. America experienced a financial boom in the 1920s, and with business booming, people used their disposable income to buy stocks. Alright, look, that's not a bad idea, in theory. But the problem is that stocks soared to ridiculous levels. This made people optimistic and they began borrowing money to buy more stocks and the entire market eventually collapsed. The Wall Street crash, amongst other factors, led to the infamous Great Depression. Millions were unemployed, entire economies wrecked, all because people thought that stocks would just keep going up forever. Wait, that sounds familiar. By the 1980s, it was Japan's turn. Yes, even the Japanese can be silly mooses under the right circumstances. The Japanese asset price bubble was so ridiculous that the land under the Imperial Palace in Tokyo was said to be worth more than the entire state of California. Seriously, did nobody think that was a potential red flag? Anyway, the bubble burst and the Japanese stock market has not reached those highs even today. Imagine buying a Japanese stock in the 80s and it's still worth even less today. It's mad. Then came the 1990s with the dotcom bubble. All you had to do, right, was slap on a .com to your company name and investors would just throw money at you. Pets.com, webvan.com, etoys.com. People were just buying anything sounding remotely internety. When the bubble burst, billions went up in smoke. People even lost money on Amazon and Google. But to be fair, those did recover. Jesus. But the stupidity did not stop there. Enter the 2008 mortgage crisis. Mortgages have always been a safe investment. I mean, after all, who doesn't pay their mortgage? The problem is that mortgages don't really make a lot of money for banks either. So in 1970, a guy called Louis Ranieri invented the mortgage-backed security. So again, it was a good idea in theory. Well, look, I mean, communism is a good idea in theory, but it doesn't work out, does it? The mortgage-backed security soon became a collection of crappy assets, slapped together and bandaged in shit and sold as AAA rating investment. Despite red flags, corruption from institutions like big banks, rating agencies, and even the SEC led to asset prices continuing to inflate artificially. When things finally went tits up, the government didn't blame the banks, They use taxpayers' money to bail the banks out. The economy still hasn't recovered, and quintile disparity is at the worst it's been since the 1930s. And finally, the modern classic, crypto and NFTs. Now, Bitcoin might survive. Maybe. It's probably still going to go down a bit. But let's be honest, most of these coins are junk. And NFTs, well, people were paying thousands for pictures of cartoon apes and rocks because it was stupid. That's why. Seriously, why am I attempting to explain stupidity? Tulips with a JPEG. Tell me that's not history repeating itself. It turns out that all humans have a fundamental weakness in our psyche. We think that we are smarter than we are, and we are too easily guided by our often capricious emotions. That's why the best investors like Warren Buffett make decisions behind fundamental analysis and principles such as margin of safety. Thank you for watching and have a great day.